There, TMHX. Hello there, Timmy Edge FX here, and I hope you are doing well. So here I want to talk about the key points to understanding market structure, right? So one of the key points to understanding market structure is knowing your sorry about that, knowing your higher time frame buyers, right? So we can obviously start from the monthly, and there's something I want to point your mind to, right? So if you look at the situation like this, what you would see is that currently the price is moving bullish, right? So we can now see that price is just moving bullish here, right? So gold, market like gold, market like Nasdaq has to do with more of fundamentals. And anytime you hear a certain news, price is always going toward a certain direction with very little pullback, right? But even in that, right, you can still find your structure because all the time market is always making a structure, right? Market always making a higher high or a higher low, a lower high or a lower low, right? And what you need to understand is that markets the market is being understood in three phases, right? Premium, discount, and equilibrium, right? So immediately you literally want to buy low and sell high, right? And what's the concept of buying low and selling high? Is about knowing your market structure and dealing ranges, right? And knowing your liquidity level, stop ons, trying to catch the end of a pullback. That is one of the best thing that a trader would want to do, right? Now, for example, let's look at a situation like this, right? The trend has been all bullish. The trend has been all bullish, right? The trend has been all bullish. You look this, you see the market has been all bullish, right? You see it's a bullish wave, right? So how can you catch structures like this? How can you catch moves like this? Well, to catch moves like these are actually highly technical, right? They're highly technical, and I will talk about that very soon. I will talk about that. But for now, we want to deal with basic market structure shifts like a pullback and stuff like that. So but when it comes to knowing when it comes to knowing a key level, price is already at probably an equilibrium, a premium or a discount. You look at situation like this now, right? If you have had a lot of experience, you would have known that this level here is a liquidity level, right? And immediately price took out that level. This is already what? This is already a price that is enough for buyers to buy, right? This is a price that is fair enough for buyers to buy, right? So when they say you want to buy low and sell high, it's not like you want to go to the lowest pips ever, or when you want to sell high, you want to look for the highest. No, it's about the past. What was the past low? What was the past high? It is those ranges that would make us to know that okay, at that level is going to be a fair value to be called a discount or a premium. For this situation like this here, this is a level that will now create a dealing range, right? This is the level that would now create a dealing range. As you can see here, after price took out this level here, after price took out this level, right? So after price took out this level, price automatically became fair value to buy. So it means that at that point, price was what? Price was low enough, or I'll say cheap enough to buy, right? Because you want to buy at discount and you want to sell at what? Premium. So it means price here was low enough to buy. Why? Because at this level here, there were a lot of what? Transactions that went here. That is the reason why you see a lot of swing points happening around here, right? So that liquidity level is also a way of letting us know fair value for price, to know when price is cheap or expensive, right? So when price took out that level here, it became cheap enough for price to say, okay, it's time for us to what? Buy. And as you can see, what happened here? Price broke structure, right? After price broke structure, right, we knew that transactions happened here. Now price came back down and took what? This low, right? It took out this structure low, and that was fair enough for price to buy. So if you know what you are doing and you have a lot of experience, you could now go to the lower time frame to like look for your buyers, or you could just take the trade from the higher time frame here and just buy if you know your entry setup. But for now, we are talking more about market structure. I will be dealing more with Euro USD, or let's just use GBP USD, right? Okay. So when it comes to GBP USD, you know, every market has its own type of structure wave. Okay. So now we are here in GBP USD, and we can see price moving in waves of up, down, up, down, up, down, up, down, because price is always moving in waves. And our responsibility is to flow along with the waves, right? That is our responsibility, right? So you look at a situation like this, you see that what happened at first was that price accumulated at this level, then price broke structure here, right? So we call this break of structure, right? We call this break of structure, right? Why? Because price moved from here, right? Let me get my favorite on the chart so I won't. So, okay. So as you can see here, price broke structure from, price broke structure here, right? Because price was going bullish at first, right? This was the first break of structure initially, right? Price broke structure here, making this a what? A, when price breaks structure here, this becomes a higher high, right? And this becomes a higher low. Do you get what I'm saying? So this is what? Higher low. Why is this a higher low? This is a higher low because this low is higher than this low and did not break this low. But these all-time highs here was getting what? Broken by the previous structure break, right? So price broke this structure, making this a higher high, right? And making this a higher low. Now, if price takes out a higher low, a current higher low, that has already become a what? Change of character. So what you'd notice is that what you'd notice here is that this current higher low, oh pardon, sorry, coming. So what you'd notice here is that this current higher low, right? Because this was the last higher low here. This was the last higher low that got taken out, right? Because let's say we are looking at price from this angle, right? You can see the waves of price taking this level as a break of structure, making this a higher high because it is higher than this high. But it was protecting these lows, protecting these lows, protecting these lows. So it is higher low because it's higher. This is higher low because it's higher than this low, right? This is another higher low because it's higher than this low, right? This is another higher low because it's higher than this low. But what is happening when higher lows are created? Higher highs are also being created. These are higher highs, right? Now, what happens when a higher low is taken out? When an higher low is being taken out, That is a sign of a market structure shift. You do not ignore when price is showing a market, when price is taking out a higher low. Now, this is the current higher low here, right? And price took it out through this price wave, right? Price took it out through this price wave, right? So because of that, what does that mean? It means that it means that there's a signature or this low here did not take out this higher high. That means this is not a higher low, right? This is just a liquidity. Okay. Now this is the real higher low because it took out this higher high, right? And because of that, what do you expect? Price took it out at this level, causing a what? Change of what? Character. Now, price has happened that now it is a what? Change of character. Okay? So it means that this level here is a change of character. Okay? And what happens after a change of character? You will naturally expect a pull back. Okay? So this is literally one of the simplest form of understanding market structure. Okay? So let's go from here. Let's use a bearish bias. No, let's look for a bullish bias here. I think we've talked about bullish bias, but let's say I'm looking just for a common market structure wave, right? Because you want to understand common market structure waves, right? So you can see this low here and this high is a range, right? What happened to it? Price, this low did not take out this low, right? Making this a what? Higher low. Why is this a higher low? Because it broke structure, right? It's BOS, break of structure, right? After that happened, what do you expect again? After a break of structure, you want a pullback to create another higher low, protecting this low that was here, right? So after this break of structure, price pulled back, making another what? Higher low, right? So when price make an higher low, is an higher low is only valid when price has taken out a break of structure once again, right? So after this break of structure happened here, right? Why is this also a break of structure? Because there's another higher low. Can you see how they are all respected? All these higher lows are being respected, and price just kept on going higher, right? And you can see the waves as it kept on going, right? Higher low, right? Because it took out break of structure. You get? So break of structure has become cause this higher low, right? Making all these higher high, right? You know, do you get what I'm saying?